Hey, what's up, everybody? It is Monday, November 21st, Thanksgiving week. I'm looking forward to Thanksgiving. So, a little bit of a pause in the market today, but that is totally expected because we are now coming off of that fiscal flow spike that we saw, which I said was going to happen. I said that back in October, that we would spike into mid-November with the quarterly interest payment. And now the flows are starting to revert back to their normal daily pattern. So we're coming off of a spike. It's pulling back a little bit. It's normal that we're going to go through a period right now. And actually, it could be a little bit of an extended period of market consolidation going into mid-December, maybe even a little bit later. But I'll just say that 2023... I think it looks very, very bullish because you're going to have these increased interest income transfers and a big increase in Social Security benefits in 2023. So, but when we get there, we'll talk about it. I want to, the other day when I made the video, I spoke about the trade balance, petrodollars, right? But I want to make a comment about the trade deficit. I just think that's bad terminology. That's just very misleading terminology because while it might be a deficit numerically, like if you tally up total U.S. exports minus total U.S. imports, you're going to get a negative figure, okay? Because we import more than we export. So that's an outflow of dollars, okay? But there's an inflow of real assets. That's, goods and services, primarily goods. We're getting the cars, the vehicles, the electronics, the textiles, all that stuff, the steel, whatever, so it's better to call it a trade balance. I just think it's the wrong terminology. It's a misleading terminology when you use the word deficit. It's like if you went to the grocery store and you bought some food items, you're running, if you're going to use that same terminology and that same logic, if you want to call it that, you would be running a trade deficit with the grocery store, but you would not be thinking of it like that. I don't think you would anyway, because, you go there, you buy your food items, right? So it's not like you're in deficit. You've transferred monetary value to the grocery store, but in return, you get the food items or the grocery items. So I just think it's wrong terminology. I think it's very misleading terminology because when it's phrased like that, it has a negative implication, and it kind of makes people believe that somehow we're losing out because of that word deficit. But it's exactly the same thing as you go into the grocery store or any vendor for that matter, the power company. Okay, you pay the power company every month. So if you want to use that same terminology, you run a money deficit with the power company, but you have a power surplus. All right, so it balances out. It's better to call it a trade balance. It's an exchange. All it is an exchange. And by the way, when they report those numbers every month, unless you're talking about the current account, which is the broader measure, the current account would include financial transactions, right? So like United States, how much do we invest in foreign stocks, foreign financial instruments? How much do foreigners invest here in U.S. stocks, U.S. financial instruments, okay? The financial account is another part of that broader trade balance. And that's way positive on our side, all right? I mean, the money is flowing here. We have, sorry, dry air. That's way positive on our side, on the dollar side. I mean, that's foreigners acquiring U.S. financial instruments. Okay, it could be stocks, it could be bonds, it could be real estate, it could be direct investment like capital equipment or plants and manufacturing facilities, that kind of thing. So it's very misleading. And I don't want you to be misled. I want you to understand this. But I think the simplest way, especially when they report the monthly trade balance, when you hear them say it's a deficit, I mean, if you want to talk to your friends or your colleagues or your people in your family who, if they bring this up and they say, look at this country, we're running these deficits, say, hey, it's the same thing as you go into the grocery store. You have a money deficit with the grocery store, right? Because you give them the money, you give them more money than they give you, but they give you the goods, the grocery items, the food items. So it's a balance. The whole thing is a balance. It's just, I think it's bad terminology. It's badly named. And that throws people off. I mean, it's crazy. It's like, it's like the same thing about, we have to cut the deficit, or we have to cut the debt, because the government has to save its own dollars, which it is the monopoly issuer of. Okay, it has the sole and singular authority to create U.S. dollars. So this idea that, like, look at now, one of the policies being talked about is hiring. I just read this. Well, I've heard about it, but I read it again today that there's plans in Congress to hire 89,000 new IRS agents to collect $1 trillion. Like, again, it's this erroneous idea that the government has to go out and collect its dollars. It would be like, Ford or General Motors saying, well, they can't create any new vehicles until they go out and take back the vehicles that they have produced and put into the economy. See what I'm saying? Or it would be like, consider like Picasso, a famous painter, Van Gogh, Picasso, any one of them. Oh, I cannot paint anymore until I take back what I have created. It doesn't make any sense. You see what I'm saying? It doesn't make any sense. It's silly. It's ridiculous. We're going to hire 89,000. That's the plan now that I hear. We're going to hire 89,000 new IRS agents. Really, that's all we need right now, right? When everybody's struggling. I mean, 40% of households in the United States cannot afford a $400 emergency. Maybe that's even 50% of households. I don't remember the exact figure, but it's something crazy. Like 50% of households cannot afford a $400 emergency. Yet we're going to send out this army of IRS agents to take back $1 trillion. I mean, look, it's not my opinion on this. I'm just giving you an understanding of the facts, of reality, how crazy this is. But it's so infused into politics. I mean, basically you have both parties. They may disagree on certain points of this, but I think Democrats are the ones pushing this 89,000 new IRS agents. But at the same time, you got the Republicans, the GOP are saying, we got to reduce the debt, we got to cut spending. And you see this right now with the new English Prime Minister. This guy, who says we have to go into austerity basically in order for the government to be able to operate financially. And it's, again, it's just crazy. I mean, the UK government the British government is the monopoly issuer of the British pound. There is no limit or constraint on, in fact, I don't even think they have this ridiculous debt ceiling, which, by the way, here in the United States, we're coming right up against the debt ceiling right now. So that's going to be another, episode of brinkmanship in Congress as to what they're going to do with that. Are they going to raise the debt ceiling? Are they going to raise the debt ceiling with offsets? In other words, cut spending in places? I mean, it's just, we have a lame duck Congress now. They're going to have to get it done now, because if they wait, if they push it off somehow, and it's possible, because if they don't raise the debt ceiling now, and again, the debt ceiling is a totally artificial construct. It went back to the days, I'll give you some history on the debt ceiling. It went back to the days of when the U.S. was on the gold standard, before 1933, when FDR took us off the gold standard domestically. We stayed on the gold standard internationally until 1971, and then Nixon took us off of that. But up until 1933, we're on the gold standard. And that was a way to, and by the way, under the gold standard, the government had to have a stock of gold to back its money. And they were afraid that citizens would demand gold in exchange for US dollars at the time. So what they did was they issued, basically was gold certificates. Those were the original U.S. treasuries, to take that cash. We'll give you these certificates. They're good. You got our word on it. We're going to pay you an interest rate. They gave them the securities to take the cash, so the cash was not available. Those dollars were not available to purchase the gold, because that would have diminished the government's supply of gold, which essentially was its stock of money, its ability to spend. And we're not on the gold standard anymore, so we don't need this ridiculous debt ceiling constraint, okay? But anyway, we have it, and we're going to have this brinkmanship, figuring out what they're going to do with the debt ceiling. But what I was saying was that the UK, the Prime Minister now, he's all about austerity. And again, here's a guy, and this is common throughout, and I've been pointing this out, like all of these people, they're very, very highly educated. They're in the most elite circles that you could possibly imagine. It's not that they're stupid, but it's like a cult belief system. It's just kind of like a cult belief system. And in order to be in that group, in order to be in that circle, you have to maintain the same beliefs. You have to speak the same way. And all of that is the explanation behind why you can get a guy who's highly, highly educated, who's very, very successful in, the commercial arena, the business world, but yet says, we have to go into austerity to protect to have enough British pounds to operate our financial system. Same thing here. A lot of these people, not all of them, unfortunately, I mean, there's probably a lot in Congress who are very, very uneducated. I'm sorry to say. I saw a figure one time that, and I don't remember offhand, but it was an astounding percentage of U.S. Congress people who, I don't know if it was didn't even have a passport or never traveled outside the country. Okay, I mean, travel is a fantastic education if you travel. Anyway, you know what I'm saying about this. So we have to deal with this. It's something that pops up now. It's pretty frequent, unfortunately, and really they need to get rid of the debt ceiling, but they're not, because it's a political tool. It can be used to extract political concessions from one side or another, and both sides know that. But by the same token, there's a deep belief that, spending has to be limited because the government's availability of dollars to spend. And it's funny because we know and we see it when it comes to military, when it comes to defense, when it comes to right now sending money to Ukraine. There's never a question asked like, how are we going to pay for it? The money just, mysteriously, miraculously appears. Nobody has to sign off on anything. Nobody has to agree on anything. There doesn't have to be any offsetting spending cuts. It's just there. I mean, talk to your congressional representatives about that. Say, I don't understand, because anytime there's a need for money with regard to military, defense, war, it's always there. The question is never asked, how are we going to pay for it? Where are we going to get the money? But when it comes to anything social, roads, investment, education, healthcare, you name it, then it's like, we can't do that. We got to hire 89,000 new IRS agents and hope they can go out and find the dollars to be able to do that. Don't you see how obvious this is? I mean, it's such a scam. It's such a charade. And by the same token, it's a fascinating thing, because the people who, talk austerity and say we got to figure out how we're going to get the money or cut the debt, they deeply believe in that. Yet when it comes to these other expenditures, boom, the money's there. Anyway, that's it for today, folks. See you tomorrow. Bye.